This video I'm going to be teaching you how you can start trading and the most important things that you need to know before you start trading the markets, and the most important thing that you need to learn before you start trading in the market. So let's get started with the video. So now you finally decided that you want to grow your money, you want to trade the markets. So the first step that you will come across will be opening a demat account through a broker. So you cannot just directly buy shares, buy and sell shares in the market. You need to do it through a broker. So a broker is just a person that connects you and the stock exchange, and just becomes the middleman of your transactions. So personally, I've used Upstocks and Zerodha. I've been using Upstocks and Zerodha since the past 2 years now, and I will tell you the advantages and disadvantages of both the brokers. So if you want to just invest or invest for the long term or just do swing trades, then Upstocks is the best option for you. And why is that? Because Upstocks has a free account opening as of now. So you can open an account in Upstocks for free, and they also don't charge for long-term investing. So the only charge that you will be paying will be the tax, that is security transaction tax and some other taxes. So you are not paying any brokerage or any account opening fee in Upstocks if you are going to do long-term investing. And if you want to do trading, if you want to become a full-time trader or do trading as a career, then I recommend using Zerodha, because Zerodha has the lowest brokerage. It does have a small account opening fee, which is I think around 200 rupees. So but Zerodha has the lowest brokerage possible. So now I'm going to explain it to you that why is it important to choose the right broker. So now if you are buying and selling shares in the market, uh, so you have to pay brokerage and you have to pay tax to the government if you are buying and selling shares in the market. So the government and the broker does not really care whether you are making a profit or whether you are making a loss. So the bad part about this is even if you are making a loss, you have to pay brokerage and as well as tax. So you need to make sure that you are trading with a broker that has minimum brokerage, because obviously you cannot control the tax that you are paying, because that is decided by the government. But you can choose a broker that charges very less brokerage, so that will make sure that you are not spending a lot of money in paying brokerage, because as a beginner it is pretty obvious that you are going to make a lot of mistakes in the market and you are going to lose some money. So to avoid losing a lot of money just in brokerages, you can use this information and just open your account with a broker that charges less brokerage. So I have linked both the brokers, Upstocks and Zerodha, in the description below. You can click the link and open your account respectively with whichever broker that suits you best. So now the next step, the next most important point that you need to learn if you want to start trading is price action. So this is a textbook definition of price action, and you don't need to learn or just try to understand that, because obviously I'm here for you. So price action in simple language basically means the action of the price, what the price is trying to do, what the price is telling you that it might do, or what the price is just basically doing. So price action is that. And being a trader, price action should be the most important thing for you in the markets. And if you look at any successful trader, any professional trader, they will tell you that price action is king in the market. And honestly, I've seen some of the traders that do not use anything else, nothing, literally nothing. They trade 100% based on price action, and 99% of my trades are as well as based on price action. So that is how important price action is in the world of trading. So make sure you know price action very well. So now I will definitely make a detailed video about price action, and every other point that I explain in this video is a very needs very in-depth analysis and detailed videos. So I cannot cover everything about those points in this video, but I will cover a gist, a summary of those points that you need to know. But later I will be creating a series about all these points, like in this video I have mentioned. So I will be my next video will probably be about in detail price action and how you can just analyze the price action of the chart and trade accordingly. So the number one mistake that most people do about price action is they try to assume what the price action will do next instead of following what the price action is actually doing. So this is one of my favorite quotes by Jesse Livermore, the most one of the most legendary traders to ever exist. So the quote says to anticipate the market is to gamble, and to be patient and react only when the market gives the signal is to speculate. So we are here to speculate and not to gamble. So now if I break down his quote, and what he means is, he basically means that most people just assume what the price action is going to do, and not they do not follow what the price action is telling them. So if you have watched my previous video, that is not previous video, but the video where I have given you a simple intraday trading strategy, I have told you in that video that always wait for confirmation. So that is what speculating is. You wait for confirmation, you wait for the signal that the market is giving you, and then you take a trade. You do not just assume that the market is going to break this level and I'm going to get a profit. That is what gambling is, and that is what this quote means. So now I have broken down a trade for you guys, which was based on price action. I took it yesterday. So I have done a pretty in detail analysis to just make you understand how I analyzed price action in this video. So if you haven't watched my intraday trading strategy video, I have explained the resistance and support concept there. So if you haven't watched it, please watch it before watching this. So you can see I have marked a resistance zone over here. I was seeing resistance in this area, and I have marked an uptrend. So let me get started. So you can see the price was moving up. I drew this trend line. This is called a trend line. So it helped me identify the trend. So you can see I have written here uptrend. So the trend is going up. But in my resistance zone that I marked, you can see 3 red candles here. So that is it is showing that the price is facing rejection in that resistance zone, which means sellers are interested in selling the market, the stock at this point. So these 3 candles formed yesterday, that is on 11th of November. So this was during the end of the session. So it gave me a little bit of insight that the market might respect this resistance, and the price will fall tomorrow. So this was the market opening day. So you can see uptrend was broken on the open of the market, but there was a green candle. So I did not get confirmation that the market that the price is going to fall. So what I did was waited for confirmation, like I said. So this red candle gave me a red candle gave me confirmation that the market is not looking like it wants to go above the resistance zone. So now I waited for this candle to close, red candle, and after it closed, I got the confirmation that the market is not planning to go up. So I entered at 182 rupees on this big red candle. So I entered at 182. My target was 180 rupees, which was here, and my stop loss was at 183. So stop loss is basically a point where you accept the loss, and just accept that you were wrong in that trade. So it doesn't really give you a very big loss, and you enter at and you exit the trade at a small loss. So you can see how beautifully this trade played out for me. Half of the trade was covered in just a single candle, and the rest of the trade was covered pretty quickly. So this is a 5-minute time frame. Every candle represents 5 minutes. So this trade lasted around 40 to 45 minutes. So this was my price action analysis. Just an example for you guys. Do not worry, I will be making a detailed video about price action. So the next thing that you need for trading in the markets is a trading strategy. So now what most people do, what most beginners do, is just randomly look at the charts, randomly just if the chart is going up, they will buy. If the chart is going down, they will sell. So that is not the way to trade in the markets. It might work a few times, but in the long run you will definitely lose money. So you need a trading strategy to trade in the markets and to succeed in the long term. So what are the points that you need in the trading strategy? So you need to backtest the strategy. So what does backtesting mean? So if you find a strategy, if you finally make a strategy by yourself, if you find find a strategy that works, then what you need to do is go to a charting platform, wherever you can get access to the charts. So like for example tradingview.com. So you can go there, you can implement that strategy on the previous data, previous charts, and just see how the strategy is working out, if you are getting a good success rate or not, if the strategy is suiting you, if you are easily able to follow the strategy, and so on. So that is what back testing is. You need to test the strategy and see if it suits you and your type of trading. So you need to definitely back test a strategy. So if you don't have a strategy, then I have done a previous video on previously I have done a video on a trading strategy which you can use as a beginner and you can get started with. So I will link that video in the description, and it will pop on your top right. So now the next thing that you need to take care of, that you should not jump from one strategy to another strategy after just a few trades. So to judge a strategy properly, you need to take at least 100 trades on that strategy to understand the full potential of it. And according to me, even 100 trades are a little less to judge a strategy, but uh, it should be okay as a beginner for you to understand if the strategy is good enough for you or not. So as a beginner, what I used to do, I used to just surf through YouTube and check a lot of different strategies, and whatever strategy was looking super attractive to me and just showing profits to the YouTuber that I was watching, I used to just jump from one strategy to another and one day to day. So that made me lose a lot of money in the markets. So that is what you need to avoid in the market. Do not jump from one strategy to another strategy. If you are trading a strategy, make sure you stick to it and follow all the rules in that strategy. So now the next thing that you need is a trading plan. So obviously you cannot just wake up randomly and trade whatever you see. So you need to make sure you have a proper trading plan which tells you everything that you are supposed to do. So basically how the scenario should be, you make a trading plan for tomorrow, today night, and tomorrow all you have to do is just follow the trading plan like a robot. You should not think any other extra points, or you should not be thinking any other points outside the trading plan. So that is how you need to that is how the trading scenario should be in the case. So just make a trading plan and follow it religiously on the next day. So that should not be new thinking on the next day, only the following of the trading plan. So the points that your trading plan should consist is when to take the trade, when to stay out of the market. So if the market goes in your favor as you planned, you should take a trade. For example, when if the market does not go as you planned, so you should stay out of the market. So staying out of the market is one of the most important points. Most people fail to stay out of the market because they just enter the market because of the fear of missing out. So that is what you need to take care of, and then you need to have a watch list for the next day. That means what stocks are you going to trade. I have also done a video on how to select stocks on for intraday trading, so you can I will also link it in the description. And then you need to have entry, exit, stop loss points for each stock. Every single stock that you list in your watch list, you need to have important levels marked out for each stock, and as well as all the entry, exit, stop loss points for tomorrow. And definitely you need to also write down the logic behind trading each stock, because obviously you cannot remember every single thing about every single stock. So you need to write it down so that the next day when the thing plays out according to you, you know the logic behind it. And if the thing is still playing out but it is not following your logic, so you can stay away from that trade. So now the next most important thing that you need to focus on is risk management. So risk management is literally the most important thing about anything that you do, investing, trading, swing trading. Risk management is the most important thing, because you cannot be 100% right every single time. So you need to make sure that you are managing your risk and your loss is a fixed amount. So the thumb rule about risk management is you should never risk more than 2% on a trade. So even if you lose 10 trades in a row, you still have 80% of your capital, which you can use to improve on your trading skills and make that money back. So make sure that you are not risking more than 2% of your trade on a single trade. If you see a loss more than 2%, then you make sure you exit the trade right there and then, and you should always use a stop loss order. And what is that, I will definitely make a video, in detailed video about risk management as well. So as a thumb rule, just make sure that you are not risking more than 2% on a trade. And the second point that you need to make sure is always lose small but win big. So what I mean by that is risking a very little amount and winning a big amount. So it is basically called risk to reward ratio. So if you noticed here in this trade, you can see I risked only 1 rupees. That means my entry was at 182 and my stop loss was at 183. So I risked only 1 rupees and I gained 2 rupees. So if I lost I would have lost only 1 rupee. Let's say I shorted, I sold 1,000 shares. So if I was proved wrong in this trade, I would lose only 1,000 rupees. But if I since I was right, I won 2,000 rupees. So that is how the scenario should be. You should always risk less but win more. So even if I lose one trade and lose another trade, if I win one trade and lose another trade, then I would still be in profit. So now the next quote that you should live by: don't focus on profits, focus on managing your risk, and the profits will follow. So this is one of the most important things. Make sure you are focusing on your risk management and not running after profits. If you just manage, if you are able to manage risk in every single trade, then the profits will follow along. So now the next important thing is journaling your trades. So journaling your trades is very important in the in your trading journey and in progressing. So it helps you track your progress and helps you just focus on your weak points. So basically in the trading journal, what you need to write is what trade you took, what stock you bought or sold, and the review of the trade, the mistake that you made, why you lost the trade. You need to focus on the bad trades and the reasons behind them. You need to know why you lost this trade, what caused you to lose this trade, and just make sure you don't repeat those mistakes. So trading journal is definitely a very great tool which will help you progress faster in the trading journey. So make sure you always journal your trades and focus on your weaknesses, and make sure you don't repeat them again. So for example, if you lose trades thrice, three trades because of the same mistake, and you have written that somewhere, then you will realize that I am making this mistake again and again, and I need to work on it. And if you're not journaling your trades, you will just be clueless, and even if you know that you are losing because of this point, it won't be in your subconscious mind, and you won't really pay attention to it or work on it. So make sure that you are journaling your trades. So here is a summary of the video. About knowledge, you need to make sure that you choose the right broker, make sure that you know price action, and then make sure that you have a trading strategy. If you need a trading strategy, I have done a video on a trading strategy. You can use that. I have backtested it 1,000 times. I'm not kidding, literally 1,000 times. So you can use that strategy. Trading plan, I told you what should be in your trading plan, what you need to make sure about. In risk management, the most important thing, make sure you're not risking more than 2% of your trades. And trading journal, just